Good evening and welcome back to the season 5. That's right, season 5 premiere of the show, The Business Blueprint. Tonight, I brought in another amazing guest, Lanice Lawrence of Lanice Lawrence and Associates, and she's here to share her expertise. For those of you that are new, this is episode 44, and then on the Business Blueprint, I bring in experts in their different fields every third Wednesday of each month, and I bring them in live to come and share their expertise with you. As you know, April is upon us, so what makes more sense to bring in a tax professional? So for tonight's episode, Lanice will share with you how to leverage tax strategies in order to help your business grow. Because once again, the heart of this show speaks directly to you entrepreneurs and those aspiring entrepreneurs. So Lanice, say hello to everyone tonight before we get started.
Hello, everyone. Thank you for joining us. And thank you, Quentin, for inviting me to be on your podcast.
Listen, I appreciate it. So without further ado, I'm your host, Quentin McDougall, CEO and founder of Nothing But Web and the Nothing But Web Entrepreneur Network, which are watching this show tonight. So for those of you that came in late, remember, you could always watch it playback exclusively on the Nothing But Web Entrepreneur Network. Those of you that are new to the show, I usually start the show off with a quick, funny story of how I met the different guests, because each guest that I bring on here is not only a special guest, but I know them in real life, because a lot of times you might watch shows and they may get people and they never know who these people are. But everybody I bring in are personal stories that I have with them. And it's funny, always the moments when we meet people offline. So Lanice and I, for a couple of years now, have been trying to get together to get her website recreated, redone. I know she talked to another developer. It didn't come out the way she wanted, but we always left it on a hanging note. Like one day we're going to work together and get this done. So last November, lo and behold, we met each other in person for the first time, probably after exchanging text messages, emails for like probably 3 years. But in November, we met each other in person at the Birthing Your Business brunch. Those of you that don't know about that brunch, go back and watch the past episode. We talked about that. But that was an amazing event. And at the end, I'm looking at her. She's kind of looking at me like, wait, I think I know who you are. And lo and behold, it was Lanice. And then come to find out, we share a couple of stories and realize that we're in the same town and we know a lot of the same people in the same circle. So I told her, I said, hey, listen, this is the moment. So we're going to lock in the episode for 2025. And here we are again for episode 44. So Lanice, thank you for joining us tonight. Tell everybody in the crowd and the audience around the world a little bit more about you.
Yes, wonderful story. And that website going to happen this year.
Yes, it will.
Yes. Hi, everyone. Good night. Thank you for joining us tonight. My name is Lanice Lawrence. I'm the CEO and founder of Lanice Lawrence and Associates, a tax and accounting firm. I'm a certified tax advisor, certified wealth educator, and also tax strategist. So I enjoy educating, empowering individuals to save on taxes, to build a successful business. That's what I do, and I enjoy doing it.
Lanice, the floor is yours. Everyone enjoyed tonight's episode, how to leverage tax strategy to help your business grow.
Yes, yes. So as you guys know, it is tax season, and we have everyone starting a business. And tonight I want to make sure I educate and empower entrepreneurs, those who have a side hustle. You may have an unregistered business or a registered business. My job tonight is to educate and empower you on how to leverage tax strategies for business growth. Because we know how to make the money, but I want to teach you how to keep the money in your pocket. And as business owner, understanding how to leverage tax laws can help you keep more money in your pocket. And also you can reinvest that money and also build generational wealth. And one of the first thing I want to touch on is choosing the right business entity for maximum savings. So as we know, many of us may have an LLC. So an LLC is a business entity. So you could be a sole proprietor, meaning that, the LLC. You may have a DBA, or you could be an LLC, you could be an S Corp, you could be a C Corp. So these are the different entities, but choosing the best entities to save you on taxes is very, very important. And two of the entities that I'll be focusing on tonight are LLC and S Corp. So as you know, as an LLC individual, you pay self-employment taxes. And self-employment taxes is 15.3%. And what is self-employment taxes? So self-employment taxes is the taxes that self-employed individual pay, which is made up of Medicare and Social Security. When you're an employee, the employer pay half of that self-employment taxes, and you pay the other half. When you get a paycheck, you will see Medicare and Social Security. You're paying 7.25, while the employer paid the other 7.25. When you're self-employed now, you paying both sides of the self-employment taxes, which is 15.3%. So when you do have an LLC, you're paying that 15.3% on your profit. And what is profit? The profit is the difference between your revenue and your expenses. For example, you generate like $20,000 in revenue last year, income, and you have about $10,000 in expenses. So you have a profit of $10,000. So that $10,000 is what you're going to pay self-employment taxes on. You can do the math, 15.3% of 10,000. That's some good change, right? But in order, you can avoid that self-employment taxes by electing to be taxed as an S corp. Yes, if you're an LLC, you can avoid self-employment taxes by electing to be taxed as an S corp. And how do you do that? By filing IRS form 2553. But first and foremost, before you even file that form, it needs to make sense. So what I usually tell my clients when they want to decide to, elect as an S corp or thinking about going the S corp route, first you need to at least profit at least $50,000, and I just illustrate what a profit is. So if you're not making at least $50,000 in net profit, then it may not make sense, because you want to make sure that you are able to afford payroll. Because one of the benefits of being an S corp, you get to put yourself on payroll, and whatever you pay yourself is a tax write-off to the business. But you'll have to be able to afford payroll and the payroll expenses as well, and also accounting. You have to be able to do your bookkeeping, and in addition to the S corp tax return. So when you run the numbers, that needs to make sense, or else it's better to be an LLC. But if you're an LLC and you're profiting over $50,000, you definitely want to, think about going the S corp route, and then you will file the IRS form 2553 with the IRS, so they could tax you or have you elected as an S corp corporation. You're still going to be an LLC, but you're an LLC being taxed as an S corp. And I know there's business owners immediately got the route, as soon as they open their business, they're an S corp, or they open their business as an S corp. I wouldn't recommend that, because one, you need to make sure you're able to afford to maintain that S corp. And as I discussed earlier, one of the main things you have to do is to do bookkeeping, because now you're going to have to be running payroll and also being able to afford to put yourself on payroll, pay yourself a reasonable amount of salary, and also pay the payroll taxes. But the good thing is you get to avoid that 15.3 self-employment taxes. And in addition to putting yourself on payroll, you get to pay yourself distribution, which is not subject to self-employment taxes. So for example, you have a profit of $50,000 in your business as an S corp. What you can do is pay yourself $25,000 on payroll. As I said, that's a tax write-off on the corporate tax return, versus if you were an LLC, that would not be a tax write-off, because you cannot pay yourself. The way you pay yourself in an LLC is not an expense to the business. Whether you pay yourself or not, you're still going to get taxed on that money. But when you put yourself in an S corp, you could pay yourself, for example, $25,000. This is you having a net profit of $50,000. That $25,000 is a tax deduction to that corporate tax on that corporate tax return, or to that business. And the additional $25,000 now is going to be passed through to your personal tax return without self-employment taxes. So that's a wonderful strategy that I encourage all entrepreneurs to take advantage of. If you're on, especially if you're in the trucking industry, that's a very, very high income industry, or whatever industry you're in, you see you're profiting a lot of money every year. The way to avoid paying self-employment taxes on that net profit of 50,000 or more is to elect to be taxed as an S corp. Does anyone have any question, Quentin, on the S corp topic yet?
The only question that someone asked so far is, can you repeat the total amount? I think you said, was it 40,000, 50,000?
So 50,000, I would say 50,000, because the reason why I said 50,000, because when you run the numbers, you want to make sure you're able to afford, because now you're no longer filing the tax return. When you're an LLC, you file a tax return on a Schedule C, which is usually cheaper than an S Corp. No, your corporation now, it's an S Corp tax return. So that's probably running over probably close to 1,000, depending on what accounting firm you work with. And you have to be able to do bookkeeping, meaning you got to use the bookkeeping software, have an accountant or bookkeeper do your bookkeeping. That has a cost associated with that as well. And then whatever you pay yourself. So when you do the math, it has to make sense. You have to be seeing the savings. So I would say at least $50,000 per year. And it's net profit, not revenue. And there's a big difference. The revenue is what you earn. Your net profit is after you pay out your expenses, the difference between what you earn and the expenses that you pay. So whatever the fallout is, it has to be at least $50,000 for you to really see the true savings.
And then to follow up, another question they ask is, do you do bookkeeping services, or could you recommend a bookkeeper for them?
Absolutely. I do bookkeeping services. I do bookkeeping, accounting services, tax services, business formation. Yes, I'm the go-to person for small business owners.
All right, keep going.
Okay. And the next thing I want to touch on is maximizing your retirement contribution. As entrepreneurs, retirement is very, very important. You want to make sure you're putting money aside for the future so it could go tax-free. Because I know many of us are used to being an employee where an employer have these retirement accounts, and they may match that retirement contribution for us, and it's so easy for us to put money away. But when we become an entrepreneur, we tend to forget about that, about saving for the future, but we want to make sure we open a retirement account. And it's a tax write-off as well, and there are many different retirement accounts you could take into consideration. For example, a solo 401k, you could contribute up to $23,000. And yes, it is a tax deduction if you have an S Corp. It is a tax deduction as a business owner. And a SEP IRA, a solo 401k, you could think about even a Roth account. Those are different retirement account that you yourself can invest in and get a tax write-off on your business return. So it's extremely important that you connect with a financial advisor who does retirement, and they'll explain to you the pros and cons of different retirement accounts. But definitely for a solo 401k, and the amount changes every year too. A quick, nice way to save money. You could contribute up to $23,000, and whatever you're contributing is a tax write-off. It's like you're getting your money back. For the SEP IRA, I believe the contribution maximum is over $69,000, if I'm not mistaken. And you could contribute up to 25% of your net earning from your paycheck. So that's a great way to save money for the future and also in your business. And the next thing I want you guys also think about is an HSA account, a health saving account. So normal individual with an HSA account have a high deductible health savings plan. You get to choose what plan you want, because sometimes we have insurance and we don't really use it. So why not we go out and try to get a high deductible account, health savings account, and we choose the plan that we want that fits our life, and then we get a tax write-off on our tax return. For 2025 tax, if you open an HSA account, you could fund that account and I think you could fund the account up to $4,300 if you're individual, and for family, $8,550, and it's a tax write-off. So you definitely want to look into that as an entrepreneur as well, or individual as well. And that works both for individual and business owners too. So whether you're an employee or entrepreneur, you can both benefit from having an HSA account. And these accounts really, really help you save on taxes, and it also reduces your taxable income, because the goal is to reduce your taxable income, because your taxable income is what you're actually paying taxes on. Any question on that one?
No, there's some people in the chat over here saying that they took all those notes and they're going to watch that back because you gave a lot of valuable information for them to go back and watch. But keep going.
Okay, perfect, perfect. And the next tax saving strategy I want to talk about is leveraging your tax deductible business expenses. There's so many expenses that entrepreneurs are not aware of. A business expense is an expense that's reasonable. Any expense that associated with your business is reasonable and allowable for your business. For example, if you pay for the accounting services, you pay for a consultation to ask some business formation questions, some tax accounting question, that's a business expense. That is a business expense. You purchased an equipment in your business. That is a business expense. And what you want to do is make sure you keep track of all those expenses by utilizing accounting and bookkeeping softwares. There are free accounting softwares out there. Wave Accounting, I know they do offer a free subscription. Many of you guys are probably familiar with QuickBooks. You could take advantage of QuickBooks software. It's very, very user-friendly. And you also want to make sure you're keeping your receipts. The receipts is very, very important for entrepreneurs. You want to keep your receipts. And first and foremost, you also want to make sure you have a bank account for your business. I know this is the basic, but I feel like I need to say, because I come in contact with individuals who have business and they do not have a business bank account. You want to make sure the first thing you do after you open your business, you get that article of organization for your business and that tax ID number. The next thing is for you to go to the bank and open a business bank account, a checking account, a savings account. You want to make sure you do that and run all of your business transactions through that account. And keep your receipts. You want to keep your receipt. Bank statement is not good enough if you get audited. Why I say bank statements are not good enough? Because yes, you may use your debit card to make a purchase, and that transaction may show up on the bank statement. But for example, you may go to Walmart to purchase a laptop. On that bank statement, it's not going to show a laptop on the bank statement. It's going to say Walmart. Walmart sells almost everything. And not everything in Walmart is a business expense. So that's why you really need that receipt to support the transactions that are on your bank statement. So bookkeeping is extremely important in order for you to maximize the tax savings and also take advantage of all of those expenses that you incur in your business. And one of my favorite tax strategy, I have a few. One of mine is hiring your family in your business. This is one of the smartest tax strategy. The best way, to save in taxes and to get your family into your, especially your kids. If you have a child that's under the age of 18, we're in 2025. You could pay them up to $15,000. Before it was like $14,000, but for tax year 2025, it's $15,000 tax free. Did you hear what I just said? $15,000 tax free. Tax free. Okay, what can you do with $15,000? You can do a lot with $15,000 tax free. And the way to go about doing, and you do not have to issue them a W-2 because they're not an employee, and you do not have to issue them a 1099 either. If they're your child, you could pay them up to the standard deduction. So the standard deduction changes every year. For tax year 2025, you could pay them up to $15,000 tax free. They need to be doing real work. You need to have a job description for them. And when you're paying them, you want to make sure you're paying them out of your business bank account. Either you cut them a check or you transfer the money from your business account to their account so you have a paper trail, and they need to be doing work. So you want to make sure you have a job description for them. If you want to do a timesheet or whatever, you can do that. And what are some of the jobs that they can be doing? A job depends on their age. For example, you may have an individual, your son or daughter who's probably like 10, 11, 12. They could probably be a janitor, clean your office. They could do some filing. They could manage your social media account. These kids are very, very tech savvy. Manage your social media account. Do the reels, postings for you. And that's generating income for your business, and you get a tax write-off. And they themselves can not only are they getting working experience and you're saving money, but that money you pay them, they can use that money and open a Roth IRA account, a retirement account. Can you imagine you saving money from before you were 18, having a retirement account? So that's a great way to save on taxes, but it needs to be done properly. I'm not going to tell you, oh, you're just going to pay them $15,000 or $10,000. The amount that you pay them per hour, or you want to discuss that or determine the hourly rate, it needs to make sense. I would say do your research and also make sure you have a proper documentation to support what they were doing if you get audited. You need to have proof, because the IRS is going to be the IRS. If you put something like a deduction or a credit on your tax return, you need to be able to have documentation to support the credit that you're claiming on your tax return. In this case, a business expense. If they were to audit you, they'll want to make sure they see some documentation that you did pay this individual, your child, in this case, this amount of money. If you have multiple kids, 15,000 times 2 or 3, it's great. And one of the questions that many people usually ask me is, what's the age? So the age, depending on what they're doing, you're not going to have a 3-year-old do filing, right? Or social media. But if you have a modeling business, or you could have a 3-year-old probably be like in your photos, for promotional materials, depending on what you're promoting, because I do that for my twin girls. You may see them on a few of my flyers, and I pay them a certain amount of money, and it makes sense into their account. So that's a great strategy for entrepreneurs. Hire your family in your business. And if your child is over 18, because I usually get that question, what do you do? If your child is over 18, then you would have to put them as an employee, and they will get a W-2 at the end of the year. So you'll be responsible for paying all that payroll taxes, federal taxes, and all of that. But guess what? It is a tax write-off to you, to the business. So you're still getting your money back, and your kids getting some money. So if they want to use that money to buy outfit, clothes, whatever, it's a win-win for you. You don't have to give them money out of your personal account. You just pay them out of the business, and you get a tax write-off, and they're happy.
So you answered a lot of great questions. I gave you some ahead of time. One question I have right now for you is there's a big debate going on as far as taxes. It's tax season. What do you think, or what do you recommend? Should people be paying their taxes quarterly, or should they wait to the year end to pay their taxes?
I would definitely say quarterly. Quarterly taxes is a way to go. You want to pay those quarterly taxes, because you do not want to wait until year end. I've seen nightmares where I have entrepreneurs making multiple six figures. And that's why I said the business entity and structure is very, very important. An LLC making multiple six figures and profiting at least six figures, and paying 15.3% in taxes. Because one, their structure is incorrect. Once you make, as I said, making over $50,000, you should be an S corp. And they weren't paying quarterly taxes. And when it comes tax time, that whatever taxes that they hold, like usually like 80, 90,000, almost six figures in taxes, they need to come up with that money by the tax deadline, which is April 15th. If they're not able to come up with that money, one, they're going to be penalized for not paying quarterly taxes, and also interest on the outstanding money that they owe to the IRS. So if you are paying quarterly taxes now, and when you file your tax return, if you owe like $10,000 and you were paying at least $3,000 in quarterly taxes, now you only have to pay $7,000, and then the interest and penalty will not be as bad because you were making quarterly payment. But the moment you're making a certain amount of money and you're not making quarterly payment, the IRS is going to penalize you. So you definitely want to make sure you make estimated quarterly payment. And what I would recommend to as entrepreneurs, have a separate savings account called the tax account. Put at least 20 to 30% of your income into that account, and and pay your quarterly taxes, or you could just wait until you file your tax return and you at least you have some money put aside to pay your taxes when they are due.
That's a great tip because most of the time, like, I've dealt with a lot of different entrepreneurs and they wait to the end and then they say, well, on social media, it said that if I owe too much in taxes, I could just fold my business and it just goes away. So as you can see, I'm bringing quality people, give you quality information on it. So the tax money doesn't go away. You still owe the government taxes.
Oh,
Um,
yes.
so definitely thank you for that tip. My next question is, what you personally been doing this for a while. What's one of the biggest mistakes you've seen in most entrepreneurs? Maybe one or two. They come to you. What are one or two mistakes that they make that you see constantly all the time?
Um, One or two mistake will definitely be electing to be taxed as an S corp or the job because they saw some TikTok videos because S corp save your self-employment taxes. Yes, it does save your self-employment taxes. However, they're not making enough money to even make, for the S corp to even make sense. And then they end up have to pay for a corporate tax return. Then they get penalized because they're not doing bookkeeping and they cannot afford bookkeeping. So that's one of the biggest mistake. And also, filing your personal tax, your structure as an LLC, your single member LLC, and what I see entrepreneurs tend to do is to file their personal tax return and try to go somewhere else to file their business tax return.
Hmm.
That's a no-no. Or sometimes they may use a free software to file their personal tax return and try to find someone else to file their business tax return. If you're structured as a single member LLC or your LLC, you're taxed as a sole proprietor. Your tax return is filed with your personal tax return. It's done in the same process. Your Schedule C business tax form is a part of your personal tax return, which is a 1040. So when you're filing your personal tax return and your business return, it's all done in the same process. You cannot separate the two. So if you go ahead and file your personal tax return, now trying to file your business tax return, we go, no, you're going to overpay your taxes. It's a whole mess. So you're going to have to go back and amend that personal tax return and add your business expenses to that personal tax return and pay whatever taxes that needs to be paid on your tax return. If you incur a loss from your business, it could benefit you because now that loss will get passed through to your personal tax return and reduces your taxable income. So you want to make sure you claim all your expenses, especially if you're a W-2 employee. If you have a W-2 job and you have a side hustle, that will help you lower your taxable income on that W-2 income because you have a loss from that business.
Hmm. See, so I bring the experts in, because everybody just starts scrolling and TikTok says this and my EIN number is different from my social and I can find it different. So again, this is why I bring the experts in. My next question for you. So you said that we can hire our children, so we should definitely take advantage. I didn't know that was 15,000 for the 2025 tax season.
Yes,
Um,
increases.
how should we be tracking that? So should we do like a QuickBooks statement, I would guess, I'm just kind of throwing different things out there. Should we be logging in their hours? Was that something that the government or the IRS would come look for? Like, okay, hey, you paid your kid X amount of dollars. What are the real hours? Should we track that? Are they loose about that? What do you think?
I would just to be on the safe side, I will definitely track it because the IRS have a tendency of auditing small business owners because why? They don't think they could afford the big accountants or CP and attorneys to fight a case if they bring a case to them, like send them an audit letter. So I would definitely track proper documentation is important. Over document it is okay. Make sure you track it. Track those hours. Have a job description. And in that job description, you want, you are hire letter as well. And then put how much you pay them per hour. And yeah, do even a timesheet. It doesn't hurt to do that, because you're getting a tax write-off anyway. So I would definitely do that.
So you gave us wonderful tips about the difference between an LLC and an S corp. For a lot of people, they didn't know they could hire their kids. That was another one. You told us about misconceptions. Anything else you want to leave us with before we wrap tonight?
Oh, definitely home office deduction. I have two of my favorites to go. Next one is the home office deduction. You want if you're an entrepreneur and you have a space in your home that you use as an office regularly, exclusively for your business, you may turn one of your bedroom or a basement you are entitled to the home office deduction, where you get to take a percentage of your personal expenses and turn it into your business expenses. And how do you do that? You could do based on your square footage. IRS allow you to do by square footage, like $5 up to 300 square foot, like automatically $1,500 without showing proof of your utility bills and stuff like that. Or you could do the regular method or the standard method, where you would take a percentage. So depending on the square foot of your home office compared to your apartment or your house, maybe 15%, you could write off your rent, a percentage of the rent. So be 15% of your rent, depending on the square footage of your home office. Or if you have a home, your mortgage interest, your property taxes, the mortgage insurance, your utility, your light, your gas, your internet. I mean, this is a lot of deduct personal expenses that they can write off in your business to lower your taxable income. So now you definitely want to take advantage of that. You do not have to have an LLC. Let me say this. You do not have to have an LLC to take advantage of this. If you're doing Uber, if you cut here on the side, if you receive a 1099 in the mail, 1099 from someone, if you do some contracting work or freelance work, you are entitled to you are allowed to take the home office deduction. Mm. Long as you have a space in your home, it could be a garage, depending on what you do. You may have use a garage for storage, or you may have a nice home office like I do, turn one of your bedroom into a home office. You can do that. I mean, there's so many expenses, and that's a great tax saving strategy. So please, go, if you need to go amend your tax return, go back and amend your tax return. You don't need to tip the IRS, okay? Take advantage of the home office deduction. You're entitled to it. And also, as a disclaimer, your living room or your kitchen cannot be an home office, okay? So the space that you're gonna call your home office needs to be exclusive, okay? An exclusive area that you sit and operate, do your business. It cannot be a shared area, okay? It has to be it could be a garage where you have your store supplies. It could be your basement, an area in your basement, or a separate room that you decorate and fix up as an home office. But it cannot be a kitchen, around the kitchen table. You cannot be around the living room unless you separate a portion of that space and it's exclusively for your business. We may have a computer, a laptop, and you do business there. And any question on that before I move to my final
No,
tip?
listen, keep going. I'm gonna let you go. Go ahead.
Okay. I think this is one of my final tips. Listen, I
Okay.
love taxes because taxes, like, you need to know the tax law in order to save money. And this is what I do, and this is what I study. And the next one I want you guys to start doing, if you have an LLC, or even if you don't have an LLC, is board of director. Set up your board. If you have an S corp, you will call board of directors. If you have an LLC, board of advisors. This is a group of people that's close to you. They could take advice from on how to build and grow your business. It could be a family. It's a great way to turn your family vacation or family function into a tax write-off. So you could put your kids on it. You could put your friends. You could put me on it. Okay, I come over. We could go. We could go to a restaurant, and you could have these meetings and discuss business. You're gonna document this, okay? And you could you could book. I mean, you could go to Florida and have your board of director meeting. You could go to a restaurant. My end of your board of director meeting, I bring my entire family. And they were happy. And they thought I was just bringing them just to have a nice dinner. But I went there, show up with my folder, with my agenda of a list of things. We're going to they thought I was crazy because I told them, listen, we're going to have a board of director meeting. But all they were thinking about is going to have fine dining food, until I pull out that folder with my agenda with list of things I want to discuss with them on stuff I want to do within my business. Okay. The meal that they're eating is a tax write-off. If you travel, you have to travel for that board of director meeting. That's a tax write-off as well. Okay. But you want to make sure you document that, have you meeting, your minutes, who, what, where, when. That was in that board of director meeting or board of advisor meeting. Your kids can be a part of that. And that's a great way too to shift money over to your kids, basically, income to them, by paying them to be a part of your board. So that's a wonderful saving strategy. If you want to turn your way to save on vacation, that's it. That's it. You're entitled to it. and
So I
you're
could
doing
take
that.
my board on vacation. That's nice. I like that.
Right,
Okay.
and you want to make sure don't overdo it now. It needs to make sense. So I'm not going to say you're going to have a board of director meeting for 10 week or 10 days vacation. So you may be able to write a portion of that where you guys actually met and have that meeting, but not the entire amount. So don't go crazy with it. It needs to make sense. I will always tell you, check in with your tax advisor or your accountant, before you make a decision like this. But you're entitled to that. Everyone needs to have a board of advisor or a board of director. Okay, board of director if you have an S corp, board of advisor if you're an LLC, or if you don't have an LLC, you have a DBA. Yeah, you need advice, right, in your business. You're entitled to that as well. Okay, and that's a great asset protection strategy too. If you have an LLC or an S corp, it protect because you're showing that you're operating your business like a business. Okay, so you want to make sure you do that as often as you want. If you want to do it on a monthly, a quarterly, or an annual basis, you can do that. Yeah, you're entitled. You write off the meal, travel, all those expenses. You could do that. Okay, remember, proper documentation is very, very important.
So as she said, proper documentation, but don't go crazy. Don't go
Don't
crazy.
go crazy. Don't go crazy.
So before we wrap tonight, I'm gonna open up the chat. If anyone has any questions, feel free to type them in. I'll read them out for you. Tell everybody where they can get in contact with you because you're giving this valuable information, and I'm pretty sure you have people either live watching it with us tonight or they're gonna watch it, 2 months from now. How can they get a hold of you?
Most definitely. So I operate a virtual accounting and tax service business. So I have clients all over the country. So you can definitely reach me at lawraccounting.com, or my office number is 860-904-6509. Or you can follow me on social media at LLA Tax. That is LLA Tax. You can find me on social media. You'll find me, or Google Lanice Lawrence. You'll find me.
So before we wrap, any last words or advice? Once again, I thank you for joining. Those that are joining late, I'm Quentin McDougall, CEO and founder of Nothing But Web and the Nothing But Web Entrepreneur Network, which are watching this show. And we come on live every third Wednesday of each month, and I bring a live professional to come in and give you information that you need as an entrepreneur. So, Lanice, any last words before we wrap tonight?
Yes, most definitely. Entrepreneurs, please vet your people that you're working with. Make sure you're working with an educated and knowledgeable tax accountant. And there's ways to validate if these person know what they're doing. You could go to the IRS website to see if they're on a registered tax preparer, if they have a PTIN. And if you're filing taxes with someone, make sure they have a PTIN. That's a tax preparer tax identification number. Your tax return should not say self-prepared if you're paying someone to prepare your tax return. So be mindful of that. And just to know all these strategies that I discussed, everyone tax situation is different. So I would say, have a consultation with your advisor to see what strategy work best for you. But don't be afraid to take advantage of these strategies because you're entitled to it. And feel free to reach out to me. I'm here to empower you and how to grow your business and your family and also build generational wealth, because that's ultimately the most important thing.
So again, I'd like to thank everybody that joined us tonight on episode 44, our season 5 premiere. Yes, season 5. This is the 5th season. If you love what you see, go back and watch it. Continue to share with others. And our goal at the Nothing But Web Entrepreneur Network is to continue to share information to help everybody's business grow. So with that being said, everyone have a great night. Lanice, thank you again for spending time.
Thank you.
I appreciate you and being the expert and the first guest of season 5. Everyone have
Thank
a great
you.
night.
Thank you.